Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold financial products they don't understand or need. So if you're tired of being a transaction, go ahead and hit that notification bell and also the subscribe button so you never miss another video from us. How are you today, Brian?
Hey, I'm doing great, Michelle. How about yourself?
Doing fantastic. Thank you for asking. So today's topic is we're talking about lifetime income with SPIAs and how people can get money for life.
Right.
So a SPIA, Single Premium Immediate Annuity, that's what that stands for. And I'm just going to toss it over to you. You're the expert at this. So what is a SPIA and what are they used for specifically?
Okay, so let's start with what it is. You already mentioned it. SPIA stands for Single Premium Immediate Annuity. And basically, Michelle, the name explains it all. Mm-hmm. Basically, what you're going to do is deposit a single lump sum premium into an annuity and then begin taking income off of it immediately. Usually that's immediately could be within the first 30 days or up to 1 year from the date of that contract. Sometimes you'll see some other names for immediate annuity. They could be called immediate annuities or they could be called income annuities. And these, Michelle, these are the simplest ones to understand. But honestly, though, you still need to do your homework on them to find the best one that fits your specific needs. So
and read the contract.
Always read the contract. So true.
So we talked about, we know what they're used for. They're used for lifetime income, but talk a little bit more about that.
Okay. When these are set up properly, the income for SPIA can be lifetime income for the individual that owns it, right? Or even jointly covering husband and wife. Okay. So this kind of resembles a pension, a normal day pension, or even income from Social Security, how you set them up also, right? So pretty simple, actually. So.
Okay. So let's talk a little bit about how much income people can expect. Obviously, I'm assuming it's based on the term of the annuity, the SPIA. Right. But let's talk a little bit more about that.
Okay. The income you get is based on a couple of factors. One, the age of the person setting it up.
Okay.
Their sex, male or female, and them two primarily because of life expectancy numbers. Uh-huh. Okay. Mm-hmm. And third is the amount of money that you put in to purchase the annuity. So that single lump sum that you put in, and then also the payment option that you choose. Because based on that determines how much you're actually going to get. So.
Got it. Okay. Interesting. All right. So let's talk about those payout options.
Yeah, there's usually 4 primary different payout options. Lifetime only being the first one. We talk about that first because that's the title of this post or this video, lifetime income. And this lifetime income is based only on your life expectancy. It's the highest payout possible because what the insurance company has done is taken you, the individual, your age and your gender, and now have generated your life expectancy. From them tables, they're able to calculate, here's your initial premium, here's how much you're going to get out of it. But it's going to be the highest payout because it's based on lifetime. Because God forbid you pass away early in this, Michelle. Let's say you set this up 3 months later, you got 3 months of payments and you keel over tomorrow. You get hit by a bus. Okay, hate to say it, sorry. But if you get hit by a bus, it's over. The contract's done. So no payments will be made after your death. If the contract is joint payout, like spouses, the payout continues for the life of both.
Right. Okay. So if it's joint and let's say my partner dies for whatever reason, it goes to me.
Yes.
It continues paying out.
And it continues for your life expectancy. And so when they do that, when they calculate that the life expectancy, Michelle, it's always, when a joint payout, it's always going to be on the younger of the two.
Okay.
So
got it. All right. So next, life only.
Yeah, that's life only. And another one is life with a period certain. Again, lifetime payout based on your life expectancy, but the payout is now guaranteed for the amount of years that are chosen. So you might choose that, look, I'm afraid that I'm going to get hit by a bus tomorrow. So I don't want just lifetime only. I want lifetime in 10 years or lifetime in 20 years. That's how lifetime and life and period certain payout works. So,
Okay. All right. So what's our next one?
how about life with cash refund? Again, another lifetime payout. But if you haven't received your principal payment back in income at your death, the differences left is now refunded back to your estate.
Okay. All right.
So it's
And the
like,
fourth one?
it's kind of like you bought a contract. You just want to make sure you at least get your initial money back. And
Right.
that's what a cash refund will do. So,
Okay. And the last one?
and then the last one is a fixed period or period certain is what it's called for advisors that are watching this video. You understand period certain. The payout continues for a fixed period of time chosen at issue. Okay. So this could be, Michelle, from 2 years. Some companies will go down to 2-year payout. Some will go 5, 7, 10, 13, whatever you want. And you can set it up. These are pretty custom at the time. Now I've seen this used in multiple circumstances, but a perfect example is had a client years ago that said, look, we got a lot of money sitting here in savings, earning nothing. We got a 0% card loan for 5 years. Well, can we set up this income that's earning nothing as a payment automatically going to it? Okay, now look, you could set this up at your bank, right? And the bank would just automatically withdraw and ACH your payment out to them every month. Well, guess what? You're making no interest, right? So what happens here is the insurance company will write you a SPIA, and that SPIA up front puts the interest for that 5-year period up front and divides it out. So let's say, for example, a $30,000 car might only cost you $28,000 lump sum, and now you're making some money off of it. So we use that's a pretty common example of using it for a fixed period. So
got it. Okay. So we've gone through a few obvious advantages, lifetime income of the SPIA, but what else do people need to understand in terms of advantages?
Okay, some of the advantages, they're simple, they're easy. You basically decide how much income you want, how long a period that you want it for, and the annuity company will tell you how much you need to deposit to meet your goal. So it's very simple. Second is talk about guarantees. Okay, when you set up a SPIA, you're set up a guaranteed income stream for the term chosen, whether it's lifetime, certain period of years, whatever you choose, how it's set up. It's a custom feature, but you got them guarantees put in place. People like guarantees. And I think another advantage would be predictability. So just like while you're working today, if you're still working today, you're pre-retiring, you know every Friday you're getting a paycheck if that's what your pay date is. If you're at retirement, you're receiving your Social Security benefits, you know that once a month on a certain date, by a certain date, that Social Security deposit is ACH'd into your bank account, right? That's the predictability feature of a SPIA. You know, it gives you peace of mind knowing that each month that you've got this direct deposit coming to you if that's the way it's set up. So.
Got it. I have a real quick question on just lump sums. So we talked about here's how it works, is that you deposit a lump sum into this annuity, right? Some lump sum premium into the annuity, and it begins to pay out whenever the term, like look based on the contract. It could be 1 month, it could be a year, it just depends, right?
Right.
And then we talked about different payout options. So that's something you select as you're setting up the SPIA.
Yes.
So what's the minimum people can put down? Or is this something where they're rolling over like maybe a 401k or something? Can you do that into a SPIA?
Yes. I'm glad you said that because think about this, for example. Let's say your company does not offer a pension. Okay. Right. Old school retirement planning had pensions. Today, now, you mentioned it, 401k is the big card in the room, I guess you want to say. This is your plan. This is what you've got. So What if at retirement, you could say, you know what? I've got this big lump sum. Here's my 401k. I want to take an income stream for the rest of my life. How much can I get?
Okay.
People will roll their 401k into a SPIA. Do I recommend it? Not very often, especially the whole amount. Would I recommend some of it? Yes. Set up enough for your income stream. But the problem with the SPIA being used for that is interest rates are super low.
Right.
The payouts on these are super low. Okay, so you're in today's environment, inflation is beating it all day long. So that would be an issue. So I would set up, if I was setting up an account today, which I just did one here a few weeks back for a young lady. It was, and perfect examples, 401k, had made a lot of money in the last couple of years, very excited, set it up as an income stream for her, only 25% of it. And we set it up for a specific period, the next 10 years. And she says, oh my gosh, that's more money than I can spend. Well, what's nice is we still got 75% of the 401k left.
Right.
So, and we need growth there. We still need growth because she's young still. So
sure. Okay. All right. So you talked a little bit, we talked about the advantages. Let's talk about disadvantages.
Okay. Just a couple here. Loss of liquidity. Okay. In the example that I just said, if I would have put 100% of her 401k into a SPIA, what would have happened if she had an emergency next week that she needed $30,000? Well, okay. Once your lump sum premium has been deposited into the SPIA and the payments begin, there's not usually liquidity options in the case of an emergency. Some SPIAs have a one-time lump sum payout in case, but you don't see it very often. So loss of liquidity would be one disadvantage. Second one I would say is, how about loss of control? Once your income payments have begun from the SPIA, you now have no control over them payout options. Okay. And payout options are chosen just like a pension. Here's your payout options. You chose it. You're stuck with that for the life of the contract, and that may be your life expectancy. So the money will pay out accordingly how the contract was written. So that would be number two, a disadvantage, loss of control. Right. 3, loss of purchasing power. Lifetime income may not keep up with inflation, and that's where we are today's environment. An option to offset that is to purchase an inflation or COLA rider, and that usually costs a fee. So,
oh, interesting. So you can get an inflation rider on this. What is that? What
it depends on the company. Some companies offer it, some don't. So you have to, and then again, there's why I said in the beginning, yes, they're simple, but you still have to do your homework to find the best one that meets your needs.
Okay, but they do offer this, and this would be something.
It is an available option.
You'd have to set it up initially when you set up the SPIA. You can't just come back and say, hey, listen, I want to add this rider. It doesn't work like that, does it?
Can't go backwards with it. So.
Okay, good to know. All right, perfect. Is there anything else? I mean, we've covered quite a bit here on these. They do seem pretty straightforward, pretty simple. Read the contract and make sure, it goes back to what are you looking for?
Yeah, it's all about you. Customize it to your needs. And I'm not one to put 100% of all your assets into it, same as anything else. No one investment should ever have 100% of your assets. So just use common sense in it. If you need help with it, drop some comments down the video below. And we love the comments you guys been putting recently too. Thank you.
Yeah, appreciate it. Well, and on that note, if you like what we are producing in terms of content and you like this video, go ahead and hit that like button. It helps us grow the channel and helps us know that you like what we're doing. And also don't forget to subscribe and hit the notification bell if you want to never miss another video from us. Thank you so much, Brian. And thanks everybody for watching.
Thanks everyone.